All right, what's going on, everybody? As always, Christopher Inks with Texas West Capital, and as often as we can possibly yank him away from his day job to come in here and soothe your nerves, calm you down, we got the great, the indispensable, the one and only FibSwanny. How is everybody doing? Are you guys excited to see FibSwanny here today? I hope that's a yes.
I know I
am. Life gets crazy sometime, right? Yeah, look at this. Jay over here, Jay saying, I remember FibSwanny called strategy there at $100 in Bitcoin at 60K. So obviously fantastic day for him to be able to make it back here, guys. And he's got some charts to really, really show with you. So yeah, look at them. They're getting all excited, man. They're liking that you're here. You feel like a rock star yet?
Oh, I guess. I think it's fun. Don't get me wrong. I'm not one that likes to be in the limelight, but no, it's all I know is that, like, hopefully that the advice that I'm showing, definitely not financial advice, but just like, maybe give somebody an edge. Then that's what I'm here for. That's the main goal. It's just to try to find an edge in this mess.
That's what it's about, right? Where you and I, again, I've got 31 years. You've got just under 30 years of experience. I mean, between the both of us, we've actually got more experience than Peter Brandt. So there is that, but that takes two of us, right? But, again, I think the best thing that we do is a lot of these guys are, crypto-centric, Bitcoin-centric, right? You and I grew up, man, trading everything else, right? We started equities and futures and all that kind of stuff. Forex, and then getting into crypto. And so we get to share our experience across, multiple real recessions and whatnot across, big, what do you want to call them? Mature markets, right? And so, a lot of what we see with Bitcoin, we've seen before in other markets. We kind of see the things that happen. And I think it's probably the best thing that we do here. It's not necessarily, even though we get it right from time to time, tops and bottoms and stuff like that, but is really kind of the experience we bring just from being in the markets for so long and seeing that there's really nothing new in the markets, right? I mean, it's often just the same thing over and over again.
Yeah. I'm blessed because I got lucky, getting a job here in Louisville way back when I first started trading cattle. The owner, it was a small, business, small, like not public, just a little private company, probably about 50 employees. But the owner, opened up a margin account that I could literally trade whatever in the hell I wanted, as long as, I give him monthly statements and show how I did and blah, blah, blah. But I never had to worry about margin at all, which was absolutely beautiful.
That's crazy.
I could trade stuff like, like S&P and like the full S&P, not like your little girly ones that we play with. I shouldn't say that. That's kind of sexist. But that was a major learning experience. Like, I could go into all these different markets and learn technicals in all these different ways. So I got blessed in that. That definitely helped. So I did that for like 6 or 7 years. So that really helped me establish ways of doing things, like setting up risk management and setting up programs and trading ways and all this kind of stuff. So I feel blessed that was not everybody can do that, but if you can, it definitely gives you the advantage of learning how all this crap works.
It sure does. And right now I'm looking at Bitcoin here. Bitcoin is up about 16% at the moment. Here, let me throw up this chart real quick. Look at that. So
we're up about what, 10 grand in a day?
Yeah, less than a day. Yeah, exactly. I'm loving it. What I'd been talking about, big picture, was, if this was going to be a flat correction here, we could potentially see this move down toward, especially when we got the new yearly pivots here at the beginning of January, that we could get down here around this 65,000, 66,000 area. And, again, as you and I talk about all the time, these pivots and things like that, they're not like, oh my God, price is going to stop right there. It says, listen, here is the area where you have support. And, you can get a dip down below it and right it back up, right? And so I'm looking at this going, man, we've got $10,000, which is nearing 20% on the day so far. This volume over here is really picking up. But don't just look. When you're thinking about volume, here's the thing, guys. Bitcoin is now, it's institutional. So a lot of the volume that you're not seeing on this chart is going to be in the ETFs. And we might actually, I think we'll probably end up with the heaviest volume week Bitcoin's ever had. I'm thinking when you bring in cumulative volume across everything. And so for me, and Fib will bring up all these charts here in just a minute, but for me, again, I'm looking for this weekly close above that 66,000 area. That gives us a throw under of this descending channel, which usually indicates a low, and then we get a breakout through it. Again, I look at this, I see a lot of possibility for this being an actual low, especially with this capitulation volume coming in on the weekly. But initially, if you're not convinced on that, that's fine. As long as we can get this weekly close above 66, I think we've got a good chance of running to this 90 to 96,000 area here right prior to the yearly pivot. And at that point, we could get rejected there and fall down lower here, in which case we're probably coming down to around 30,000 or something like that. But if we get a weekly candle breakout and close impulsive above that 96,000 area, that should indicate that the low is in here and new all-time highs are coming, much to the chagrin of everybody who's absolutely confident that the 4-year cycle is still playing out and that, the top is in. You'll definitely know if you can get that breakout there, whether or not that's true. On the bright side, if you were holding down here and you didn't sell, you're going to get an opportunity to sell up higher if that's what you choose to do. So a lot of opportunity, I think, showing up here in the structure. And when I'm looking at this, we're just basically getting a spike of volume here on this breakdown through this range support via Wyckoff. Looking at this volume price action relationship through here, and then currently what we're seeing with that weekly candle, we'll see how the weekly closes at the end of the day on Sunday. But damn, this is starting to look like quite potentially a heavy spring or a terminal shakeout prior to getting up. So yesterday was the worst day in crypto since FTX. If that tells you anything, FTX, of course, marked the bottom of the bear market in 2022. So a lot of things going on there, but let's pop up Fibbo's chart here.
Yeah, I was going to ask you, and I haven't looked, but how's the buying volume measured against the selling volume this past week? Is the buying interest starting to come in a little stronger versus how much selling there was? I haven't looked at numbers or anything, but
yeah, I'm seeing that building up right now. I think what most people are missing on this sell-off is, and I reposted something from Jeff Park. Jeff over there used to be at Bitwise, now he's the CIO at ProCap. But God, Jeff is such a smart guy, and he was putting out. He said, "Listen," he said, "I'm thinking about it, and if we look at basically the fact that we had this 75% implied volatility yesterday. And so that was very significant. But the big takeaway is that, if you look at the ETFs, a third of it's institutional, 50% is hedge fund, which means fast money, right? And if you look at actually the selling that came down here, it looks a lot more like mechanical selling. Like, people think that when this stuff happens, everybody's always thinking retail, right? It's retail. But instead, we're not seeing that in the way the volume is coming in. And you can look at the, if you go to farside, I think it's .co.uk, and look at the BTF, the Bitcoin ETF inflows and outflows, you'll see that you had this continued strong selling going on, which again kind of aligns with that idea of what Jeff was saying, which is, when you're running a hedge fund, you get to sometimes you get to a point where the risk premium doesn't make sense anymore. And it's just mechanical selling after that. It's a selling campaign. It's not emotional, whatever. It's just, listen, we have to sell. And that's what the selling actually looks like into yesterday's low. It doesn't look like retail narrative selling. It looks like institutional, just campaign selling, just, mechanical. We have to do it. The thing about that is when you do that, as I talked about on X, when that selling stops, the repricing that happens, then you often get a very strong snapback. And I would argue we're seeing that today, right? We're getting that. Does that mean it's an immediate V-shaped recovery all the way up to all-time highs? No. Odds are, you get this sharp up there for a bit, and then you get some pullback and some kind of sideways pullback a bit while the confidence kind of returns. Because the snapback is all mechanical. It's the repricing, buying back in, right? But it's not that, oh my God, everybody got confident all of a sudden. And so I think a lot of retail with all their garbage, narratives out there, and I know you love when I say that because you're like me, narratives are just things that come afterward, right? But this is the explanation for how and why that, what we're seeing now is happening like it is, to give people a deeper insight into what's going on maybe behind the scenes with it. But we saw it. And the other thing is we saw the 75% implied volatility, right? And so it wasn't just with Bitcoin, though. It was everything was going down, right? You're going to talk about a silver trade that you nailed with that drop, right? Gold had the drop. Altcoins had the drop. By the way, guys, if you aren't with TWC, you are missing out. So many alts. XRP is up like 50% today. You got Solana's up like 25% today. But I've been talking night after night in the market wrap about looking at alts reaching for the monthly S1 pivot and getting a bounce out of there. And that happened overnight with all these huge bounces. So if you were a member of TWC and you paid attention to that, you probably made a crap ton of money this morning, more than enough to pay for years and years and years of service if you wanted to. So, between what I'm putting out there and what Fibo's putting out there, I mean, you guys, there's just no reason not to. It's absolutely crazy. But you can do that over at members.texaswestcapital.com. I just want to push it out because, man, seriously, if you missed your opportunities this morning because you weren't sure what was going on or what to watch for, man, you got to be a part of it. You got to do it. So anyway, yeah. So
I'm a social mood guy, just like you are.
Yeah.
And when people are talking like capitulation, I think capitulation is like where social mood gives up the need to explain itself.
Yeah.
So in other words, the crowd doesn't admit defeat; they just withdraw. So and price doesn't cause this; it documents it. So to me, it's like, because a lot of people think capitulation means like, I don't know, maybe they think it's like a buy signal, but it really isn't. But I don't know. I try to look at everything in a social mood concept. It's not the easiest thing in the world, but so when I'm writing out on X or I'm in my group, a lot of my writing is stemmed toward social mood thinking.
Yep.
So people will probably read it and go, "What the fuck is that guy talking about?" but it's like he's off in left field. and it's true because I don't think enough people talk about social mood enough to really understand how to measure that in the market. It's a completely different concept that blew my mind when I read it, like 20 years ago. And then it was almost like a cleansing, because he had this like thought process of how markets work. And a lot of it had to do with TradFi and economics and how all that works and everything. And then you read social mood and you're like, well, that's completely opposite of everything I've learned.
Right?
Yeah, it's crazy. But
yeah, because when you first come in, you're told that narratives are what drive price action. And then you find out what? You find out, no, narratives are just the way we explain them afterward, right?
Yeah. And everybody's always chasing that. I did too when I first started, don't get me wrong. But now I just completely don't follow them because to me, it would mess up my analysis and would skew me in ways I don't want to be skewed. So I kind of stay out of it. But I mean, I haven't been on X very much the last week. And that was by design because I didn't want to hear the shit that was going on. We were going
you knew it was coming.
Yeah. Oh yeah, for sure. But neither here nor there. Let's go into the charts and see what's up. So
get it in there. There you go.
I'm going to start out with the 4 hour. There's a couple levels that I was watching, and of course, none of this is financial advice. This is just the way I'm attacking things. I had some orders down. Basically, here I'm going to start with the weekly because it's a lot easier to see.
Yeah.
With my system, and I know we're in a situation right now that seems very weird, but it's just the way it's working. Is once this went into the bear zone and we had this area of consolidation in here, the previous shallow fib that I have here at 85,832, in order to signify a true bearish primary trend change, you need to have 3 consecutive settlements underneath that level. Now, we've had one this week, maybe, don't know, the week's not over yet, but it could be number 2 this week. So by the end of next week, if we're not back above 85,832, then that is a signal to me that this thing could go a lot further to the downside based on the structure that I look at. However, there's also other things that happen pretty quickly, which, like you said, we had this move in the market that was pretty spectacular versus what we've seen historically. Is we had this straight move to the downside here to where I have buying orders down here based on this move to the 61.8% level, because this is a buy right here at this target, which hit because we went to 60,000. And so we're underneath that. So this level hit, which spurred on my buying for the 4 hour and the daily. But I already am long some of those from around 83,000 average, which I'm underwater at the moment. But I'm holding those longs because I haven't had that third settle on the weekly to tell me to get out of those longs yet. But with it going down to the 60K, that was my level to add cold storage. To me, that was a spot for me to say, hey, if this is going to hold, I want to be buying in here and adding to cold storage and not adding more longs to trade with, because I already have those longs in place. Now, if we don't get back above the previous shallow fib by the end of next week, I will exit out of my 4 hour trades and take those losses. And then on the daily trades, what I'm going to do, and this is just the way I have my risk management set up, I will actually move those trades to cold storage because I'm taking money out of my bucket that I've had in there over the past year or whatever time frame it was since the last time I've done it. So it's kind of my way of kind of equality or easing my bucket amount to where I'm trading less in there, but I'm moving more of it to longer term looks. So I know it's a weird way of doing things, but it's just kind of the way I'm attacking it. Yeah. But I will take the loss on the 4 hour and get rid of those. But I have enough in there that I can move the BTC to cold storage that I've lost on the daily. I mean, it'll move my average up from all the other ones I have in there. But I'm willing to take that risk for long-term looks because I like the buys that we have in here at 60K. Can we break a lot further lower? Absolutely. But right now, everything's looking like it should structurally. Yes, it sucks that we went all the way to 60K this quickly, because if I got that third settle underneath that previous shallow fib, my order would be in to buy at 60 when that happens, but it's already happened. So it's kind of weird that it actually happened before I got the third settle. Doesn't always happen that way, but it still hit the buy target, and that's what matters to me, is that the structure is working. Now we'll have to kind of see what it looks like after the end of this week. Neither here nor there. It's like, keep following my plan, and my plan is and I'm sticking to my guns because that's what I always do. It's just that this setup is definitely different than what normally happens in this case. So in other words, I don't know what the hell is going to go on. So the best thing for me to do is to stick to my risk management plan, knowing my risk, and just go on from there. Other than that, if I start dumping into more stuff, emotions are going to ride high. I'm going to do stupid things, and I don't want to do that. I'm just going to do with what I got and move on from there. I
love what you just said there, and I hope people picked up on that, because you've been doing this for almost 3 decades, and you said, listen, I could get emotional. I could get in there because I think the thing that a lot of people do, actually, I know they do, is that they think that, oh my God, well, once I figure out what to do here, I'll never be emotional. And it's not that way, right? Your system is designed so that you have a plan to go through step by step. You know, this A happens, then I'm going to do B. If C happens, I'm going to do D. And that way you don't have to worry about emotions coming in there. Am I right?
Yeah, that's exactly it. Now, yeah, and I'm also knowing my risk too. Yeah. So if it gets down to a certain point, there is a percentage that I don't want to go beyond, but I have room to breathe because I've kept my exposure low ever since the daily went bear right here.
Yeah.
My exposure on the downside has been minimal. I don't want to trade like I've been trading, on an up move, and I want to keep exposure low. So when I hit these certain targets, I'm waiting for a lot further down to really start to get back in, basically. Now, I've tried little things here and there, and we've taken a little bit of losses on the way down. But that's the main thing is if you get in, it knocks you right out. Those are small losses versus the gains that we've made prior. So it's like you got to not look at the recency bias of everything that's happening right now. Open it up and see how your whole year is gone, and then you can kind of see how it all works. When it all flows together instead of just coming in at the right time. Like if you just jumped into my group in the last month, you'd be like, well, there's nothing going on, but there really isn't. There is, but there isn't. So you really got to just kind of pay attention, patience. You got to wait, let the market come to you, not you go to the market, all that kind of stuff. So sometimes it gets boring, and I'm just hoping that people don't get too bored because you do gotta wait around sometimes. And then also there's a lot of other markets going on too. So don't focus just on Bitcoin and all the shit that's going on there. And then you're missing out of everything else that's happening. So
absolutely.
So that's what's kind of been my mindset. And and don't get me wrong. It sucks when things drop like they do. And it's hard. I mean, people's portfolios probably look like freaking garbage and it stresses them out and there's a lot of emotion. I get it. Everyone goes through that. But you just got to have a risk management plan in place that really fits you and your family and personality or whatever, and just be really, really stout with that and be strong with it, because that's what really matters. Because if you start to push away your risk management and start getting a little bit more emotional, you're not going to be a happy camper. I've done that before, and I definitely was not a happy camper.
Exactly.
But let's go back.
Absolutely.
Let's go back to the 4 hour here. This is basically, we went into the bear zone here, worked our way down. There was a little bit of a bull zone right here that did not go into an actual bull zone because it was just consolidation. Really, nothing happened in here. It was just kind of a sideways move, and then just went back bear again. It just clicked enough, but it wasn't enough to change anything. Momentum was really low. But as you can see, as the bear zone hit, momentum starts to kick ass, and then next thing you know, the bears are in control. And they're working our way down. So with that movement to the downside, there was a small little, I erased some of the fibs that were in on this to where it works its way out to where these blue fibs are what comes into play. And it comes back into here. There was a small little move down here that brought this low into play. So when I bring that low up to the high that's on this 4 hour right here, that's where these extensions kind of come into play. And that's where my levels are based on my threshold theory levels here. So there was one in here at the 141 to 127 range. That, as you can see, the market came down and kind of tested in here, and popped up, tried, came back down, tested again, bounced up, didn't make a new high, and just said, you know what, we're done. And then it broke and went to the downside. So once it broke this 141% level at 73,304. The 63,085 became a target, and that's where my buy was for the 4 hour. Not to buy more longs because I'm long enough. I already have enough exposure long at 80 something thousand average, which I'm underwater, but I'm going to hold on to that because the weekly is telling me to still hold on to it.
Yeah.
So, but this was a spot that I added some longer term stuff. Because I like that price and I can get a lot more sats for the price, right? So that's why I wanted to add some cold storage in there, because it's a really good level to watch. That it could break down, but we'll have to kind of see. Now, if you're trading this as regular threshold theory, and you bought this target and wanted to trade it while you're in the bear zone because it went into a little, oversold, and then it came back up into the bear zone, and that's always a good sign when you get this kind of a move. Yeah, everything's still kind of, looking as a bearish correction or a bullish correction in a bearish market based on this 4 hour. And that's what you're getting with the ADX, but it's also the ADX is turning over too. So
yeah,
this could be an area that could be the low in here as it wicked down to that 60K and came back up. But this level was nice because that's where, without the wick, it still held pretty nicely. But if you are buying it here and it's still in the bear zone, the sell target is actually the shallow fib. So if you're, because it works both sides. So if you want to play the short side, you can play the short side. And as this comes down to this point, you buy it and then you sell back here and then you wait for another target, way down here. And unfortunately, we're at this level right now that this 60K is like a major level, because, like on the weekly here, if we end up breaking this, we're like going to be in this shitstorm of nothing underneath.
Yeah.
There's a low here at 48. There's a low here at 38. I don't know if any of those will come into play if this ends up breaking down, but those are level. I mean, it could get ugly if it breaks this level. So to me, that should be a spot that a lot of buying interest comes in the market, and look what's happening. There's a lot of buying interest coming into the market. So that's a good sign. The other thing I have on this weekly, by the way, is I have two moving averages on here, because a lot of people talk about this, about the 200 SMA. At 58K, and I hear, and not to say that it can't get to 58K, I hear so much out there like it's got to get there, it's got to get there, it's got to go there. No, it doesn't. The market doesn't have to do shit.
That's right.
So it could get there, but then again, it might not. But I also like to look at EMAs that are actually fib based. So this the black line is the 233 EMA, and to me that one makes more sense to me, because when you look at the black line here and you look at how it hits support and then it breaks down and then it hits resistance and then it hits resistance again, then it breaks and then it holds support, it's a lot better looking than the 200 EMA.
Yeah,
it's a lot cleaner. So to me, you get a little bit cleaner areas, I guess. So when this came down and it wicked down underneath this line, this is where buying interest should have came in, and that was around 63, which right here on the 4 hour was the nice buy there. So I added both those in there. So let's compromise and let's look like on the inside of both of them together. And then it's kind of hitting in the middle of these two. So to me, that's going to be a really strong level that I'm hoping should hold. Because when you look out further, you got these two highs here that when you bring this out here, this is definitely an area of what resistance was that flipped to support. A huge order block in here that took off. So this is a pretty key area. If this level doesn't hold, it could get pretty ugly. But right now, it doesn't look like it's going to break down, but you never know.
Yeah, we'll see. We'll see how the weekly closes, right?
Yeah, exactly. And also next week, because I still got 3 weeks to look at on my weekly. So there's still time to get back above that 83K or whatever it needs to get to. But if you are playing the other side, you can sell this thinking that it's going to break down. Now, if you look at it on the 4 hour, if you're playing it just threshold theory, if you get 3 settles underneath this 63, I don't have anything until 41. I mean, it's crazy, but if this ends up breaking, I'm going to be holding out for a lot longer or a lot further down if this ends up breaking. So, and that's the 4 hour, but that's if you're playing the short side, that's another way to look. You could also put in some trend lines here, to kind of watch this, if this starts breaking back to the upside, then maybe you don't want to sell it and you want to just kind of hold your long. But if you are playing it, this is the spot to sell and take profit off of that, to where you can. So you could actually come back down and retest this area again and buy again, and then do the same thing and kind of go back and forth if it wants to consolidate, which it could based on the turnover here. It could just kind of consolidate in here for a while. So we'll see. But that's just one way of looking at the 4 hour. Daily, the dailies fibs, again, There's a fib here that had 66,550 was my buy, which the target hit, which was inside this previous fib zones or whatever. So that was where I bought there. Of course, it went down a lot further. So I mean, we're back above it at the moment. But we bought right there and it kept going. And I'm like, crap, here we go. But the 60,000 found some buying interest and has popped us up. Same thing with this one. We got the move back into oversold conditions. Not that I want to look at this just all by itself, but it is a signal here. And then also the ADX is getting historically overdone. And again, it could stay up here for a while, but this is a red flag that buying interest could come in and start turning it around. This is a sign that could happen. And then also it holding the 64,502 without having 3 settles underneath this, because you get 3 settles underneath this on a daily basis, it brings in shit like way down here. It's like, there's no.
And make sure, guys, if you're listening, he's talking about 3 consecutive settles, not if there's like 4 days and 3 of them settle under there. Unless
it has to be all in the same. Yeah. And the reason for the consecutive is because that's where the psychology is happening in people's brains. Is like the market's underneath, but they're willing to take a little bit of risk. But if it goes another day, and like, oh my gosh, I might lose it. And I guess historically, when I've done some analysis, that 3-day rule works pretty well. It's conservative. You could probably use 2-day, but I'm a 3-day person, and I just kind of keep that as in my strategy, so I don't like try to think emotionally and say, well, let's just do 2 this time instead of 3. I just stick to 3 because it seems to work historically, and not to say that future results are based on all that kind of stuff, but so far the 3-day rule works really well for me. But there's some psychology that goes on here, like, okay, it's hitting my wallet. Oh, should I get out? Should I not? And it's usually that 3rd day, and people just say, screw it, I'm out. And that's usually the signal that filters that level, that the psychology has changed. It's given enough time for people to run emotions, and then they finally just say, screw it, I'm out. And it's usually an emotional move that causes, but then that filters for me and says, hey, now it's time to get out. So if this gets out, psychology is, if you're here long at 64 and it breaks you, you're going to be like, well, shit, I need to wait for at least 52. Maybe I'll wait till 40K. Yeah. So and then a lot of that psychology will say, okay, everyone that's along that line, like trench warfare, you're fighting and fighting and fighting. These sellers come in and just say, you know what? Boom, they pump you out. They take over that level. Now you're back here in the battlefield going, okay, where do we set up camp? Well, let's go way down here at 38K, and we're going to set up a big barrier down there. And yeah, there'll be noise going on the way down, but that's where a lot more masses of buys will be coming in, because that's the next psychology level in the market. And that's what I'm trying to measure, is those kind of levels, not so much narratives of where things could be and those kind of things. Not that it's perfect, but it's something to look at. But
let me show some. I just noticed when you have your daily up here. Let me show you my chart here real quick. Notice
what I'm saying is making sense, because it's kind of weird, but yeah.
Well, but look at this. We've almost got a bullish engulfing candle. So we had a big daily candle yesterday, big candle, and we did a little bit further. If we're closing above 73,000, that gives us a bullish engulfing candle. And guess what? Look at the volume. So, a big volume on the daily here. Look at this volume. Let's keep scrolling here. Where does it get bigger? Back over here, August 5th of 2024 was the last time volume was higher on the daily. And we still have, what is it, about a quarter till 12? We've still got 6 hours, just over 6 hours left in today. So this starts looking really interesting here if we can get, because we're already reclaiming the descending channel. So we're already printing what appears to be a throw under here. Volume getting close to yesterday's volume already, which was already huge. Bullish engulfing daily candle over this big drop. I mean, oh my God. If you're looking for, possible, is this bounce going to have some legs and potentially be a reversal? I mean, that's your first step there. Now, again, it's still just one day, as Fibbo kept pointing out. There is no guarantee that the low is in. But these things I'm talking about, those things that Fibbo's talking about, these are different things we've noticed throughout our careers of trading that really kind of lean that lean that belief more toward potentially some sort of bottoming process versus, oh, we're going to get, reject here and come, continue right down right now. So I thought that was really something.
Key word you said there, bottoming process.
Yes.
That's a big deal. A lot of people don't think it's a process. They think it's like a certain level that it needs to get to or whatever. So that's a big word you just used right there. That a lot.
Yeah, the lowest price, guys, is not a bottom. It's an event. Exactly. Bottoming is a process, and usually that's where you get some ranging going on. Same thing with tops, right? Yep. Yeah, people say, "Oh, I called the top perfect." Well, no, the top is that distribution process that happens within a range, usually, near the event, which is the highest price. So if you can learn as a trader to focus on finding the tops and not the highest point, which is just an event, and you find the lows, not, the bottom, not the lowest price, which is an event, you're going to find yourself a lot better off as a trader rather than trying to catch that absolute tops and bottoms, highs and lows that are going on those events.
Yep, exactly. And one other Bitcoin chart that I could show here before we move on to some of the others. This is my monthly, and the monthly went bearish too. But the interesting thing here is we're early on the month. I mean, it's only February 6th, so we got a lot of time before this candle ends. But same rule applies even on the longer term time frame, which is kind of weird. But we went bear zone here. But then again, you got a shallow fib here at 88,142 that had 1-2 settles already, but we're working on the third. So it's the same concept that we have to get back above 88,142 by the end of February. And if it clicks that, then it negates that break, and it's not a primary trend change. So you have one on the weekly, but then you also have one on the monthly. So this could all kind of work together. So if we don't get back above 88,142 by the end of this month, and we settle the month out underneath that, that could be a red flag that maybe we are going a lot further lower, that kind of thing. Or if it gets back above that 88, golden. We bought cold storage. We got it at a good spot down lower. We got longs that we're playing to see if this is going to, work itself out, all of that. Now, you could have the weekly actually signal before the monthly to where you could get the 3 settles underneath. And then that's why I'm kind of breaking it up into, I'll take my losses on the 4 hour, but I'm going to keep these other ones just in case. Now, if we get out of the, if we get into the monthly and it doesn't settle right, I'll probably look at buying some like 40K puts or something to keep my capital, but use options to kind of, mess with the downside. But again, even on the monthly, if you break this, I mean, there's just the only support you have in here is at right around 50K on this, whatever the low on this candle was, which was 49,217, which was, had a little bit of a weird month right here. But if you look right here, that could be a spot, which also matches right here. So that could be it. But anything underneath there, I mean, you're all the way back down to 20K, which is weird, but I mean, that's just the way it's set up. So this is another thing I'm watching. And again, the weekly and the monthly, I don't trade. I use them as guides. All my trading is in the 4 hour and the daily, because that's where the volatility and the stuff that you can measure better is for trading, for swing trading for me, is there. So that's what I wanted to kind of show on BTC. Even though we went all the way to 60K, I know it sounds weird, but it's all about structure to me. So I mean, I guess you could say I hate saying it, but it could be a bearish correction in an overall bullish market. I mean, I know that sounds weird because we're down 50%. It just could be a much larger correction that could still hold structure. And this structure is really being tested. So I know it's really hard to say, and it's people are like, well, it's down 50%. How could it be a correction? And maybe it's not. I don't know. Maybe it is a crash or whatever. But to me, it's structurally sound. It's still to the point where I can see getting above 126K later on this year is still in play. If we flip the other way, then that kind of negates everything, and we go back to the drawing board and and figure things out. But I'm not going to do that and waste my time until the structure actually breaks down for me. And so far we're there. Now again, did I play it all perfectly all the way down to 60K? No, but I played it to the point where I've left all my emotions out and I don't really give a shit because I kept my exposure low. I wasn't trying to like get back in and try to make it all back at once, all that kind of stuff. So I don't know. It's a weird game, but we're playing it. And I just had so many people message me and say, "Oh my gosh, we're all dying," and all this stuff. And it's hard because I'm a human. I get emotional too. Yeah. And it's like, and I'm reading all these messages and I'm trying to like calm people down. At the same time, man, my portfolio is getting hit just as hard as everyone else's. So it's like, it's like you just got to stick to plan. I know it's hard. But that's the only thing you can do. Otherwise, you're going to really fry your brain trying to figure things out. But I don't know. I'm rambling. But we can move on. Let's go on to Ethereum. I did not trade this because I wasn't around. I was really busy this week, but it's working so far. If you're playing threshold theory, went into bear zone, went down. There was a buy here at 2208 at the 200% that got bought, and then it moved up. And if you were doing it at the time, you would. This is what it would look like. You would have been buying right here, but your sell would have been the shallow fib, which of course never made it. It popped up and then came back down. But what happened is it tested the bottom of this. I put in a trend-based extension here, which this is what fell inside this zone. And that's where the buy was, right around this area. But it wicked down to the bottom of this fib extension, popped back up and then came back down, tested it again, came back up, tried again, but stayed bearish. And then, of course, stayed underneath the middle line here, underneath the bear zone. And then it finally broke down, came back up and said, yep, it's sell time. And then it came back in. And then I had then off of this break right here, since this kind of broke, and then we broke below the 141% level, the 200% became the target. So if you bought here, then that's what you're supposed to do. I wasn't around. I didn't have a limit order in. That was my fault. But if you did buy here, the sell on this is the shallow fib. So if this gets up, if you bought here, which I think people in my group probably did, if you bought here, your sell is going to be up here at 23.27 because it's going to take 24.31 to get us back into the bull zone. So if this goes up and you sell this for profit up at that point, that's perfect. And if it comes back down, you can get back in, back down here at the targets. Or if you buy it, or if you sell back out and take profit, and then it keeps going, gets back into the bull zone, then we re-enter along, getting back in, because it's telling me that the structure is back turning into a little bit more of a bullish look instead of a bullish correction in a bearish market. So looking at the 4 hour on Ethereum, it's playing well in it so far. So if you're playing that, sell it or not, or you can hold on to it and hope that it gets back into the bull zone, and then you can press your position and then dollar cost average it and then take off. You could do it that way too. And then the same thing on the daily. Daily did the same thing here. There's a 100% level here at 22.28 inside this zone here. It hit as a buy, but then it broke down. Depending on how you play it, you could have kept it, or you got out right away, or not, because you're back down to the point where the 200% target came into play. So you would actually be buying it here. So depending on how you did this, you could have bought here, and if you didn't get out, you could have dollar cost averaged in here, and you're probably somewhere just above water at the moment. But if you didn't play this and you waited till this buy and you're long, the same thing applies. The shallow fib at 22.98 is your sell to take profit, and then you got further targets down here underneath some of the fib extent. The next zone down here was down here at 1400. So, but right now, same kind of thing. We're seeing a lot of things. It's dipping outside the zone, coming back down in. The ADX is getting historically overdone. So these are areas that could find a little bit of a pop and get us back going. Doesn't take us out of the realm of bearishness by any means, because we're still underneath the shallow fib. We're still in the bear zone. So you gotta remember that that we are still on the bear side here. So if you are buying, you got to look at some of those upside targets to take profit while we're in that bear zone. Or depending on your exposure and your risk management, you could hold it to see if you can get the next bull zone and go from there. So it just depends on how you want to play it.
Yeah, and that daily on Ethereum is pretty much exactly what Bitcoin's looking at. You got the throw under of a descending channel support.
Yep.
You've got right here, you can see that daily candle almost bullish engulfing as well coming up here, the most recent one there. So, I mean, again, I think you look at Ethereum kind of the same way you're looking at Bitcoin. You're mentioning the same kind of ideas, with Ethereum that you had on Bitcoin there as well.
Yep.
So I think there's a lot of possibility in it. We do have a question here. Tree Brothers says, Fibbo, thanks for your analysis. My question is, do you still believe your July-ish timeline still looks possible for a Bitcoin high?
The answer to that is yes. As long as that weekly doesn't get that third settle for me, the answer is yes. I would say structure is there, but the probability of hitting it might be a little less. But it's something that if the structure holds here, we should see new all-time highs this year. But do we get to the 209 by July? That's going to be a little bit more skewed into a little bit of a tail on the distribution of probabilities. But it's still there. So it's just a little bit less in probability. So I wouldn't really necessarily focus so much on the 209K. I would focus more along the lines of the probability is still there of getting above a previous high, all-time high, and making new highs sometime this year. Not so much focusing on the 209K. But I'm not ruling it out. You never know in this freaking market. You start getting buying,
Bitcoin, right?
Yeah, especially Bitcoin. You start getting a lot of buying interest from all over the place. You just never know. But probability is a little bit less, but still a possibility because I haven't broke that structure yet. Break the structure, then yeah, it's out the window, and then we'll reestablish new looks, new macro looks, new probabilities, that kind of stuff. Hopefully, I don't have to do that because it's a lot of work. I'd like to just kind of go with the flow of what we got going, and we'll see what happens. But right now, it's still that way, just a little bit less of a probability than it was before. I'd say before I was probably like, roughing in numbers. I was probably like saying 60% chance that it was going to get there. I'd say it's probably more of like a 30% chance of getting there now.
Okay.
But
all right. And real quick, guys, hey, listen, if you haven't been reading, Fibbo's put he's got a 16-part series, Threshold Lens, that he's inserting into the Friday editions of the Market Breakdown. This is my free daily newsletter, kind of a satirical, absurd look at what's going on in the markets. And so you can get that. You can join it, themarketbreakdown.com. It's free. And today will be, what is it? Is it 5 or 6 today? The 5th or 6th installment? Sixth installment. So great stuff.
It's really just my way of kind of like talking about different concepts that people are talking about on X, that I can bring social mood into it and kind of give you an idea of what social mood looks like, or when I write things about social mood with certain concepts. That's really what it's all about. Because you'll hear things like mean reversion. Well, what does that mean in social mood terms? Stuff like that. It's more along the lines of just bringing a little bit more social mood talk out there, because I know right now most people probably think I'm freaking nuts when I go out there, because I'm a believer that mean reversion really doesn't happen in financial markets. When I say that, people look at me like I'm retarded. That's the looks I get from people. Like what do you mean by that? It's not to say that it can't go to those levels. I just don't look at it as mean reversion, because to me, markets are dynamic. You can pick infinite amount of means. What mean are you talking? Blah, 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 that kind of thing. So for me, markets are a little bit more dynamic. They're not economic equilibrium type, look for fair value kind of stuff. But that's a social mood type of thought process. And that's what makes people look at me like, oh, what the hell is going on here? And I'm not saying that people that have mean reversion models don't work. It's just not a social mood type of program. So you can still use mean reversion and all you want. If you have an edge and you can use those for good, absolutely use them. But it's not a social mood concept. That's what I'm trying to do, is like just give others another way of looking at a market versus what you hear on the economic narratives that you hear all the time. That's really all it is. So it's just a educational talking point. Not to say that you have to do it this way. It's more of just saying, hey, there's another way of looking at this. And this is just another way of looking at it.
Yeah, we have one more question. It says, how important is today's daily close, and what impact will daily close have if it closes higher or if it closes lower than yesterday's? And my thought right now is we're having a really great bounce right now. It's the sharp repricing that I talked about on X, in terms with what Jeff Park was saying out there. So, I think right now it looks really good. Like Fibbo is, we're both much more interested in how the week closes. So if you missed that earlier in the show, just go ahead and, afterward, just kind of watch it from the beginning and you'll get our thoughts on there. But we're both really much more interested in the weekly than the daily close at this level right here. Yeah. And we kind of both went through that at the beginning there of why. So
yeah, but what you mentioned earlier, if you're looking at a daily candle and you're into the candlestick patterns, that bullish engulfing is something you would look at on the daily. And if we settle back above previous day high, then that right there, that engulfing could be a signal on the daily of what people would be looking for. Yeah. If you want to look at it just on the daily basis. But you mentioned that earlier on the bullish engulfing that we could have. So to me, on my chart, I would like to see a settle above the shallow fib, which is at 72,533. But yesterday's high was 73,173. So pretty close. So those are the levels I would be looking for to give me a signal for the daily. But again, I'm with Chris. I'm more concerned of how that weekly is going to look and how that reacts from the macro structural look. Yeah, is what I'm looking at mostly. All right, gold. Gold on. I haven't been doing much in gold here. We did hit a target down here and bought, and then we sold on the way up here. Not all the way up. I wish I would have held it, but I think it was one of those days where it was coming up on a month. Was it a Friday or something? I don't know. Maybe it wasn't. I got out because the profit looked too good. But then again, I haven't been back in it. So to me, I'm either going to be buying back here at this target again, or waiting for a much further downside to the extension, which comes from a previous threshold here. That's really just touching just underneath the 4121 level. So that's really, I'd really buy. I'll buy gold while it's in the bear zone down here. I probably won't touch this. I'll probably wait to see if it wants to come down really hard while it's in the bear zone and get down to some oversold conditions, I guess. Or I'm waiting for a new bull zone, which hasn't happened. And right now we have to get back above 50.85 to get us back into a bull zone. Because right now it's definitely got 3 settles above the shallow fib because we're up above it. So if it clicks into the bull zone, that will be a buy, and then the sells would be up here in the extension area up here, somewhere in this range. But for now, I'm waiting for a bull zone there. I've just been kind of waiting on that. Now silver was amazing.
Come on, explain this one, man. This was so good.
Well, I had a couple of things. One, we hit a target here at the 61.8% level. It wicked down, came back up, and did not have 3 settles. So we had a trade there. I can't remember where I got out, but it was somewhere in this range. So we made a good move there. But then I was just waiting to see if it would get back into a bull zone, which it didn't. But then it dropped pretty hard. And my next target was my trend line break objective that I had from the whole life of the bull zone here. Take the highest point to the trend line itself and take that same rate of change. And that's when I had my target was, I think the market, I can't read it there. 60, the market got down to 63.90. My limit order was at 64.10. So it wicked down, filled me. And then when I clicked back in later on in the day, I'm like, holy shit. Like this, but it kept going up. I'm hoping it keeps going for the guys that are long in my group. I actually got out a little bit before this call because right after this, I got to leave. And by the time this closes for the day, I don't want to hold any futures over the weekend. So I went ahead and got out. And I'm hoping it rallies up for the rest of you because I bought at 64.10 and sold at 75.75.
That's a great trade, and it was quick.
If anybody wants to Google on how much that is, go right ahead because it's a freaking amazing move. I only did the mini. I didn't do the full, craziness because of margin requirements for one. The margin requirements are insane now. But so I got out. So hopefully you're long and it still keeps kicking. If you're actually in this with the bear zone, buying down here, the shallow fib is your sell point. So 82.39 is what I actually had in as my sell, thinking that hopefully it would get there, but I'm getting out a little early, which no complaints. Even if it goes to 83, the trade's dead for me. I made my money. I'm moving on. I'm not the kind of person anymore that, oh man, if I could have waited till 83, I could have made much more. It would be nice, but life's not perfect. So I'll take the trade. Freaking amazing. I'm going to move on. But I'm hoping that everybody else is working there. So it's one of those things like a lot of people don't like trend lines and diagonals, but it's something that works really well for me on my thresholds and stuff. It seems to do because I took my trend line from the start of my threshold, not like an absolute low or high. So it's not like a trend line that a lot of other people are probably looking at. But when it broke and came back up and retested right there and then started back down, I'm like, oh yeah, baby. This is looking good. So that's why I put that limit order in just to see. I didn't think it was even going to hit. But it did.
Almost exactly.
Yeah, almost exact. So that's what it's not so much that there's two things. It's good that I got the trade. Second of all, which I think is more important for myself, is my plan and my strategy is working. That to me is better than the trade itself, because I want to know where those levels are going, and if they're working, that's what I want more than anything else. Then I'll be a little bit more, confident going in. Not that I'm going to go overexposed or anything like that. I still stick to the plan, but it's just it's a comfort thing and a less stressful thing on my body to know that I'm just sticking to plan and just moving on and not getting so emotional. But man, I'm so glad I got that wick. It doesn't always happen that way, but it's always fun. So hopefully, guys, that keeps rallying up and you get sold at 82 and make a lot more on the move to the upside, which I think it will, because when you look at it on the daily, and another reason that I like that it bought right at that level, and I also liked that level on the 4 hour because on the move to the downside here, if you're low, I didn't buy this one and I probably should have, but the shallow fib should be bought on the daily because we're in the bull zone. So as this came down, you should be bought in at 76.61. I decided not to do that because just margin reasons. I can't do both. So I'm just going to do the 4 hour. And the reason I like the 4 hour on that trend line break, because when you look at it, it's right there at 64.10 is where I had the order in at. And then on here, it came down, and this came down to 37.95 was my level. That's been my level for the bull zone here. Like when you go back historically and do all the analysis, it still stayed right there, and it got down to a low of 38.60, which kept the bull zone. So to me, that's why I like that 4 hour level as my limit, because if it was going to hold the bull zone here, the 4 hour is going to kick up and the daily's kicking up. Now, I didn't have any buy orders in here, but if I was long here, this would still hold and I'd still be long. And then now I'd be back in the money again. Not much, but back to where it's back above it. I didn't do this when I did the 4 hour instead, but this is where the 4 hour and the daily kind of work together for me. Bull zone holds, 4 hours got a nice buy there. Let's do it. And so far it's worked out so far. But we're still in the bull zone. So that's what matters.
Before you go away from there, that little green candle on the bounce, the top of the bounce, what price is that?
Little green candle on the top of the bounce.
So it pulled down and then bounced. Yeah, right there. What's that?
The high on that is 92.01.
All right. So my thought is right now we've got 3 waves off that top. So if we break up above that, that would signal that that's corrective. And that
Are you talking
sets
about
up,
the 3 waves here?
yeah.
The
So if we break out from where we're at, we just rally and break out above that second wave at that point. Based on the height of that pullback, that would give me a target of around 157. So I think it's possible that we might still have one decent push up for silver here before we get some kind of extended pullback. If we can get above that, I think that sets it up.
Yeah, there's a little bit of a longer term, like if I did, because I had a couple other trend, if you do this off this major run and then get this correction, I'm looking at 140. I got another one out here that from before that's at 138. So between 130 and 140 would be my target based on what I would look at.
That's nice.
Which I mean, I'll take the 150 that you have too.
140 take the 140 either way.
Yeah, I'll take any of them if it wants to go back from buys down here.
Yeah.
But yeah, that's what we're looking at. Just kind of showing you how I use the 2 different time frames to work kind of together, kind of confluence between the two. Doesn't always work that way, but sometimes it does.
Yeah.
And that also gives me a little bit more comfort to go in there and try the long. No, it could have broke down. We could have went into the bear zone. I would have got out in the 4 hour and all that kind of stuff. Take a little bit of a loss. And sometimes that happens. You know, it's just that's the part of the game. Dollar. I'm just throwing this chart out here. I'm still not a fan of the dollar. I still think it's going way, way lower over time. We've had this huge period of consolidation. Every time it tried to go into a bull zone, there's been a previous shallow fib that has not broken the entire time. So no bull zone, no bull zone, no bull zone. Everything's been trying. It's been more consolidation. So while we're still in the bear zone, I still got a target down here at 93.45. Not even as a buy target, just like the next one that I would just kind of look at, see if it would come down here and bounce and then kind of keep working its way down to these other targets. But for me, this is just a long version of looking into the 80s for me. That's where I think we're headed. Unless, of course, we get back into a bull zone that actually matters. And if we do get into the bull zone here, we have to get back up to 99.14. But you got to have 3 settles above 100.3 to even get that structure. So until then, I'm bearish on the dollar. So I haven't been trading this anymore. I'm just done with it. I'm just watching it for fun. I know others look at it, so that's why I keep posting the chart. But there's the dollar. SPY. Been waiting for a bull zone on this one, and I missed my target. There's a few of these that you're going to see I missed my target, but you know, barely. But I missed it here. I had a order in at 200%. Kind of missed it. Sometimes that happens. It's not all perfect, but it would have been nice. I'll tell you that. But missed it. But we're working our way up. But so for me, since I missed this, and we've had 3 moves up above the shallow fib. If this goes into the bull zone, I will buy it. I know that's kind of weird that I haven't bought this at all, but that will tell me that the structure has changed to where even when we had this move to the upside here, where it went and touched into the fib extension level, which I look as that first line of defense, sold off, didn't go into the bull zone down here, and then the bears just kind of took off and pushed us lower. Now you could have, depending on how crazy you are, you could have used this zone right here as a buy, but you would have got out because it had 3 settles underneath, and then you would have been pissed off. So it's a good thing that you didn't do that. But the way I was looking at this was, I really wanted to wait because everything was really trending to the downside pretty good. So I was really looking for a much lower buy before I would want to take the risk. But unfortunately, I missed it. But if you got bought down in here, good job, good trade.
Well, speaking of indexes there, the Dow is it hit 49,980.29 so far. So we're almost at that 50,000 mark. You're like me. You remember back when it was, below 1,000. So
yeah,
it's kind of crazy, man.
Yeah, it is kind of crazy. All right, here's another one that I missed a target on. Was XRP. I had the 100% here. Then you have the extensions. And then I had there's a level right here. I just picked this because it was the closest. Now I could pick this one, but I kind of like this one a little bit better since it went up, came back down, and then started to take off, which was matching pretty close to the 127. Did not hit. It was just another one of those I missed and then took off. Good setup, just like before. ADX is getting done pretty historically. It was a little overdone on the top here. No, but these are just red flags. Not to say it's going to reverse, but these are red flags that it could. This one was getting pretty overdone over on the bull zone here. Moving up like that. So same kind of thing. We're moving up. Red flag of maybe getting a little overdone down here, popping back up into the bear zone. So this could have been a spot. I just missed it. But as you're talking about your engulfing patterns, this one hadn't closed yet, but it wicked up there for sure.
And it's what, almost a 50% rally off the low almost?
Yeah, it's pretty crazy. I don't know what it is. Let me just do this real quick. So far, 38% from the low.
Yeah, 40%. God, yeah, it's crazy.
Yep. Nice little move if you're in it.
Love it.
I missed it. That's okay. But one I didn't miss was coin.
Oh, nice.
That one hit nicely. So far, target hit here. I just picked the wicks on the lows here, basically. I could have went a little bit further lower, but it hit nice. And that was off the Fib extension. I had 100%. Basically, the 100% was right here. So you could kind of see the support on these two lows right here. Then you didn't get a new high, and then it broke down. So once that broke down, then you look to the extensions. You could do it either way. You could have bought it right here if you wanted to, and then it could have went down and started to come back up, and everything would still be a stop underneath the 143. 3 settles underneath the 141. You're going to want to look a lot lower. So this is a good spot for this to kind of start going back the other way. But being in the bear zone, the buy here, the sell would be at 214 at the shallow fib on the way up on this one. So that's what I'm looking at on coin. I'm going through these kind of fast because we've been on running out of time here. Robinhood was another one that Chris wanted me to look at. This one didn't even come close to my target, but so I would have missed
it. That's pretty close, man. I mean,
it's close, but it's not 10%. Super close. I would have had an order at like 67 or so. It wasn't. Yeah, it was close, but not great. But it's in the bear zone. It's not like it can't get there. Yeah. It's like that's the thing. Just because it's bouncing doesn't mean we're done. But the zone to sell would be up in here between 92 and 98, but the shallow fib is at 97, 96, which is just inside the zone. So if I was long down here, that's where my sell would be. I don't have the bull zone on here, but I think it would have to get back above probably 100 or so before it gets back into the bull zone. So that would be a sell. And then you look for further targets to the downside, because I don't usually play the short side a lot, but if you're looking at threshold theory, everything works the same the other way. So instead of like looking, in the bear markets, you're finding areas to buy, but you're wanting to sell while in the bear zone to look for lower buys versus the other way around. It works the same. I just don't usually work the short side unless everything is just so primary bearish. Then I'm going to be shorting everything. But until that, like on Bitcoin and others, you need that weekly to really show that it's going bearish before I really start to consider doing short stuff. And that's just me. I'm pretty conservative. But another good look here. If you guys are in it, nice little bounce. I'm sure there's good momentum, that kind of stuff. MSTR. This is one I was showing Chris earlier. I missed my buy by $3, and I put son of a ... because I just missed it. So I had a target buy in there. The low here was at 101. I had a limit order in at 101.50. We hit 104.17 as a low, so I kind of missed that. But that would have been another good one to hit. So again, it's not perfect rocket science, but
After today, Fibbo is going to be moving his 200% to 188% just to make sure.
No, because that would bring in recency bias, and we don't want that.
Exactly.
But I was telling you earlier, like I was busy this week, but this is one of those concepts of if I was actually in front of the computer and actually doing trading, and I'm watching it, and it's working its way down, and it's touching the bottom of the bear zone right here. Yeah. And the momentum. I mean, the momentum was starting to flatten out as the price is coming down. I might have moved my order up a little bit, maybe, but it's hindsight now. But yeah, if I was there, I might have moved it up just to grab some, just because strategy is kind of tied into BTC, and BTC was given a lot of good buying orders. I don't know. I probably would have done something different, but I missed it. But if anybody else is long there, it's looking good. I like the move that you're seeing so far. What is that, 25, 26% probably?
Yeah, I think it's up over that now. It was because we were talking about it earlier before the show, and now, now it's up almost 28% now. It's moving like a shit coin.
Yep, yeah. We're looking at 28.64, 28.6%. Good move. Hopefully you guys got some bought down there, but which you probably another spot that people might have been looking at was this low right here, and that would have got you. If you were looking at that low for a buy, for a horizontal support. But yeah, I missed it, but I just kind of wanted to show you that.
Well, and there also was bullish divergence on the RSI as well. Slight bullish divergence down there at the end. So.
Oh yeah, for sure. Yeah.
So anyway, there was maybe kind of watching those things, might have seen that and jumped in on it.
Yeah, jumped in a little earlier than the low. Yeah.
Yeah.
And then lastly on here, I got Solana.
God, look at that.
Another one I missed. My system's not working really well for all this weird process, but some work, some don't. You can't do everything. But to be honest, the silver trade, I don't give a shit about any of these right now. So the silver trade did well for me. You
going celebrating this weekend, huh?
Yeah. I'm going to probably take the weekend off and not even look at charts. But this is just another one that looking good on the breakdown. I wanted to target inside the zone. Didn't quite get there, but again, we're starting to get a nice bounce here. Got below. I always like to see the dip below the bear zone and back up in, and then you get wicks like this and get that buying interest. This is just a good sign. ADX is way overdone historically, so that's a sign things could reverse. Because I mean, in this case, it was bearish, but it went into consolidation here, even though it worked its way down. But we were all in the bear zone down here and never got into overdone. This one's a little different, getting down underneath the bear zone and coming back down in. And again, you probably got it just doesn't work right. But it's looking good here. So that's just another one. If you did end up getting bought down in here for other reasons, maybe there was something historically back here that you saw that worked. The shallow fib would be the sell order while in the bear zone, because if you get up to 93.14 and sell, you don't get back bull until 148 on sol. So it's kind of weird because it's just been ugly as shit for a while. So this could be the first sign. You never know. But if you are playing the short side and you are long, that's the sell, and then you look for this target down here to buy again, and then this would move the fibs like it went down to that target. Then the sell would be at 87.91, kind of doing the stair stepping to the downside instead of the upside. But I missed this one, but just kind of showing you some of the other stuff that we're all watching here. All right, where's BTC during all this talk? Still looking right where we were thinking, right there at shallow fib, selling off, boom. Not selling off like hard, but good spot for profit taking from buying down here. Good $10,000 move. I wouldn't be complaining about it if I sold back out at that point, but I don't have any longs down here. All my stuff went into holding it for 5 years, which is very boring. But that's just a whole different concept. But that's all I got. Unless you got other things, any questions out there? Or
man, I love it. Man, you say that's all you got, as if it was just a few things. Yeah.
No, I got probably 3 times as many as all these. If you want to talk all day, we can do a 24/7 stream and just go through every chart we got.
I'll tell you, there's so many great looking opportunities from overnight into this morning. And so,
for sure.
I think, again, how do I say this without offending people, right? The thing is, usually as retail traders, you hook onto narratives that are out there, and it's a comforting process, right? Even if things are going bad, you go, oh, well, I couldn't have known, or I shouldn't have known, or I was listening to somebody else, right? It's all kind of a comforting way of allowing yourself not to actually pay attention. And so, again, if you read between the lines of what a lot of Fibbo and I talk about, whether you hear us out here, for free out here live, or you're in Texas West Capitol and you're listening to us discussing and putting things together, it's reading between those lines. It's listening to what we're actually saying, because if you're paying attention, last night, this morning was an absolute amazing time to potentially put in a buy. It didn't guarantee that price was going to fly higher, but there was so much stuff going on at these levels that it made more sense than not. And as a trader, that's what you're trying to do, right? You're not going to be able to guarantee that your trade is going to be profitable. It's not going to happen. The only thing you're going to get guaranteed is that you're going to lose money from time to time. No matter how long you've been doing this, you'll always lose some money. But the newer you are, the more money you're going to lose, and the more often you're going to lose it. Precisely because you don't understand proper risk management. You don't understand what you're dealing with emotionally and psychologically. You're still probably caught up in the narratives, the human narratives there across social media, all these things, which at the end of the day, really detract from your ability to trade successfully. And so Fibbo and I, we spend a lot of time, that's probably why we're so gray in the beards here, trying to help y'all understand, where that's going to throw you off, most likely. The one thing you'll never hear from Fibbo and I is that price is definitely going to do A, to this area, or B to this area. What we do is we say, listen, here's our reasoning for getting in. Here's where the stop loss is going to be. Here's where the profit target is. And we give you reasons for that. But always with the understanding that it's proper risk management that's going to save you when you get in a trade, because we also instinctively know, after all these years of doing this, that it may not play out. And so as a retail trader, one of the hardest transitions you have to make, right, is from the way you initially think when you come into markets to how it really is. And one of those biggest things is, don't try and be perfect. The more you try to be perfect, the more losses you're going to have. And the second thing is that there are no guarantees other than what I said about losing money there.
I'm thinking of beards and Bitcoin when you say that, because Tillman and Andrew always rip on you for saying
give you a hard time about that. Yeah. But at the end of the day, this is the reality of being in the markets, right? It just isn't. So the only thing you really have control over when you're in the markets is, okay, where am I going to enter and where am I going to exit? And your exit, guys, listen, your exit is infinitely more important than your entry, because a bad exit can make a good entry absolutely awful. And a good exit can make an absolutely awful entry much better, or not quite as bad. And so when we say exits, we don't only mean where your target is, but where is your stop loss and why. And so, these are the hardest things that I noticed that traders over the last 30 years, me talking to traders, have really had difficulty getting through and changing their thought process on. So don't think it's going to be something that happens overnight. It isn't. Learning to trade is not something you'll do overnight. It's something that takes consistency, practice, discipline, effort, all those things that I always talk about. But you can do it. I often get pushback from some people that say, oh, not everybody's made to trade. Well, I don't believe that at all. I think everybody absolutely can learn to trade profitably, consistently, but you have to put in that work. You have to accept, that you're not going to be perfect, and trying to be perfect is going to ruin you. You have to accept that proper risk management is above all else. You have to accept that there are no guarantees, right? And once you start doing that, it changes the way you think. So instead of looking at a trade as, Fibbo said this great earlier, he said, basically what he said is, I'm not worried about this single trade. I'm excited if my system works, because Fibbo knows that if you've got a system that works, then over time, you're going to be ahead. And that's the goal. Yep. That's how you do it.
Yep.
So yeah.
But I just wrote something down, a softer tone for, and this is for Tillman and Andrew later on. Once you accept that you can't control the market, trading gets easier. Your focus shifts to the one thing that matters, limiting loss. That's what you mean by.
Well, I'm going to use that next week, man. I got to rewind this here a little bit later and record it down. I'm going to use it to blow their minds because they ain't watching this right now.
That's a softer way of saying what you say, which totally makes sense to me. But I know they make fun because you can control getting out on a profit, but getting out on profit is completely different than getting out on losses.
Yeah.
So yeah, even if you got out at 1% versus 10%, you still had a gain. But on the loss side, limiting loss is the most important thing.
Yeah.
When trading. So
because you have to be able to being a consistently profitable trader, folks, is about remaining in the market long enough that your edge compounds. That's what it's about. And that's what Fibbo does with his system. That's what I do with what I teach. And that's what it is. And so most people aren't ready for that. We get that. But if you guys are ready to understand that and do that better, join us over at TWC. We'd absolutely love to have you there. One more question here before you get out of here, Fibbo. I know you're going to get going. But it says, hey, Fibbo, how many different assets do you actively pay attention to and track?
5. Basically, I showed most of the stuff. BTC, ETH, gold, silver, SPY.
Yeah.
That's it. And then, other setups every once in a while, like if things are setting up really nicely, like the XRP market right now, or Coin or Robinhood that we looked at, those kind of things. Yeah. If the setup's good and I'm watching it, because I don't watch all of them, it's more along the lines of like if I'm looking at other things and the setup's right and my system looks like it's a good spot to do it, I'll add those. Yeah. But that's very minor. All the other ones are BTC, ETH, gold, silver, the metals basically, yeah. And then in SPY. So I have a little bit of a mixture. So I got a little bit of crypto, I got a little bit of shitcoin, I got a little bit of metals, and then I got a little bit of equities in the S&P. So I got a little bit of all the different sectors I like to look at, but I don't go much more than that because I don't have a watch list of 30 because it would just be way too much work. And I'm old school too because I like to be in the charts and I like to be like, I'm not an algorithm guy, nothing wrong with algorithms. But I actually like digging in and doing the work myself. Yeah. And I can't have a workbook of 30 different things to do because having just the 5 is enough. If you actually take the time to actually analyze and do the work and stuff like that.
And
so that's a quick 5, basically 5, maybe 10 with some extra shit, but I would say
it's very limited though versus what most of retail coming into crypto does, right? They're trying to chase everything.
Yeah. And I used to do that a long time ago. Like I would go to like way back when I used to use a thing called FinViz, like the financial visual. And I would go out there and I would just start clicking all this stuff and it would list like 100 different things I could get into. And like, but yeah, I didn't do well with that. So
focus will get you guys a lot more than being crazy and looking at everything. Like Fib was talking about here, getting in the charts, understanding it, you start to feel the heartbeat of that particular market. Yeah. Believe it or not, they do have their own specific kind of heartbeats, but you don't notice it if you don't focus on them. And so, again, we talk about things that retail traders do that are going to hurt them more in the beginning is trying to trade absolutely everything out there. Find some highly liquid stuff. Listen to what Fibbo said. Bitcoin, Ethereum, highly liquid. Gold, silver, highly liquid. SPY, highly liquid, right?
Probably the most liquid.
Yeah. And so what those do is they, first of all, know that, you're going to be able to get in and out usually where you want to. You don't have to worry about slippage. But also, it's actively traded by a significant, group of people. And so, that's what you do. Pick a few things and focus on it. Stop trying to jump everything out there. Stop trying to target everything out there. Because I'm going to tell you what, again, both of us being 3 decades here each, you're going to get a lot further once you start focusing, limiting what you're focusing on and just trading that. So
I mean, if you really want to, just pick one you really like and just really focus on that and just learn from it.
Yeah.
I mean, that's probably a better way of doing it. Like if you really like Bitcoin, just stick with that and just learn that.
Absolutely.
I just like being in it and doing the analysis and charts myself. And I'm sure Chris is probably the same way. Like he doesn't want 50 different things to do Elliott wave analysis on because it's a lot of work. But he's probably good at it and probably could do 50 of them.
Still a lot of work. Don't tell him that. I'm gonna get 50 chart requests a day now. Don't do that.
No, believe me, we got to keep that to a minimum for sure. But be helpful at the same time. But it's just more of like I enjoy doing it. Yeah. I just don't like putting an algorithm to it because to me, I like to dig in and like you said, you get a feel for the market. These indicators to me are like EKGs that a doctor looks at when you get your heartbeat. So they know what to look for because they've been doing it a long time. And if they look at your EKG and it doesn't look as well as it did 6 months ago, then it's a sign to say, let's dig in a little deeper and figure out what's going on.
Yeah.
And for me to do that, I can't write an algorithm to do that for me. So I'm going to go ahead and dig in myself. But that's just me. If people get into algorithm trading and they're making money, do it. Absolutely do it.
Do what's good for you.
Yeah, do what's good for you. Exactly.
Awesome, man.
But that's just how it rolls for me. And I guess you just got to be a weird, passionate guy on charts to be able to do it all old school.
Just got to be a chart guy.
It's got to be a chart guy.
Man, as always, such a great time when you join in, man. And I guess we'll look for you maybe in the next 2 weeks if you've got some time there.
Yep. The Fridays look pretty open, so we should be pretty good.
Good. And hopefully
as long as the energy markets still keep doing what they're doing. Like natural gas going up 50% and down 30%.
Natural gas was that stupid.
Shoot. Crude's been calm compared to some other markets, but I do a lot of power markets all over Europe, and they've been starting to go nuts too. So it's been keeping me kind of busy. But
good times. You come to Bitcoin for the calm, right?
Yeah, actually, to be honest, because I don't have to explain to a CFO why their mark to market looks like shit because the natural gas market went up 30%. But I come to Bitcoin for the calm.
There you go.
Yep.
Oh man, so fantastic. So hey everybody, I'll be back next Wednesday, Beards and Bitcoin with my compadres Andrew and Tillman from Arch Public. Usually giving me a hard time there.
That's a good show.
11 a.m. Central, 12 p.m. Eastern. And then next Friday, I'll be back with the market breakdown, of course. And then the Friday after that, Fibble, unless something happens, will be here with us. And hopefully we'll be talking about, man, I hope everybody bought that Bitcoin low, right?
Yeah, hopefully. Or it's the timing of we'll have 2 days left of the 3 days under the weekly. So we're either going to be really, really happy, or we might be at 40K by then. I don't know.
I'd like to be really, really happy. I'll be honest with you.
Me too. Me too.
But, we'll see.
But then again, we don't know. That's why we got to have these in place. But
that's right.
Yeah. No, I'll look forward to that talk. It'll be very interesting. Yeah.
So definitely come join us, guys, over at Texas West Capital. Again, members.texaswestcapital.com. If you jump in on the Liquidity cartography group, that includes everything I do, everything Fibbo does, you can get that at 50% off, but we've only got 2 of those codes out there. So the code is 50 off, OFF, one word, 50 off being one word. So do that. We'd love to have you in there. We'll give you, if you're ready to really understand markets, there you go. Most people aren't ready, but if you are, there you go. And look at me. I was wondering what you were doing there, pointing to Bitcoin up there.
Buy this right here.
Look at that. Look at this real quick here. Nick from Flagler, my membership has already paid for itself by changing my trading style.
Boom.
Love it. Yep. You guys have a great weekend. Trade safe out there. Fibbo, stay warm, man. I know you got snow and ice and cold.
Yeah.
And
can you tell?
The sun's shining off that
just
snow.
glows off the snow, and it's like the lighting in my house. It's amazing because they get a lot of light, but it's not good for streaming.
Oh, hey, listen, I don't want to make you feel bad, but we're looking at like 72, 74 again over here in South Texas. So
you can, yeah, no. Enjoy your 70s.
Hey,
if we're lucky, we might hit 40 if we're lucky.
All right, man. Hey, listen, guys, we're going to get out of here. I promise. We just enjoy talking and hanging out with y'all, but I know Fibbo's got things to do and I've got some things to do as well. So we will see y'all next time. Take care. Spread the love out there, guys. Don't listen to all the narrative garbage, retail narrative garbage that's going on there. Slow down, take a deep breath, think things through, and ask questions. All right? Take care, everybody. We'll see you next time.
Trading tip: always manage risk before chasing gains.